Hopefully you're well. Give us a shout out in the chat if you're on. I think I can see a few people jumping on now. So good morning, everybody. Welcome to another Wealth Coffee Chat. 31st of August. 31st of August, 2021. What a year it has been. What a year it has been. Hey, morning, James. Good morning to you. Good to see you. Got a few of the crew jumping on now, which is awesome. Margaret, James and Justin, good to see you guys there. Welcome back to the regulars. Sineth, Aaron, good to see you guys. As always, thanks for rejoining. Dean and morning, morning crew. How you going? Yeah, hopefully you're well. For those who might be new, welcome to the regulars. Teresa, good to see you here this morning. But for those who might be new, give us a shout out in the chat. Tell us where you're from. My name's Jason Witten, and I've been property investing over 20 years, helping property investors since 2003 across Australia and New Zealand build their property portfolios. Team, this thing is a marathon, not a sprint. You hear me say that all the time. We've got two catch cries around here. Buy well, never sell. This thing's a marathon, not a sprint. We're investors, which means we buy things that we want to keep and turn into income and create some wealth in the future. And last night, Alison, thanks for the shout out. Morning, Jimmy. Morning, Rodney. Last night, we did a little bit of that, which is super cool. We had a little look at some tax stuff. I could have done an extra hour on that. I think I'll do a deeper session on the tax minimising for us as property investors. I think that would be certainly useful. We had a success story last night. One of our clients now owns 8 properties. 8. I don't even have enough hands. I'll put my coffee down. 8 properties. They've now got 8 properties, which is brilliant. Well down the track to where they need to be, and the outcome for them is looking fantastic. They've paid their home off. It's debt-free. They're set up now so they can maximise. They can have the plan very quickly is going to be $86,000 tax-free income each of them. It's not a bad little outcome. You know, 170 grand between them tax-free. In the next 5 to 6 years is when they're planning to do their little lifestyle legacy maneuver. Who wouldn't want that, huh? And away you go. So, listen, team, make sure when we're going down the road, as we're looking at creating our wealth, make sure we have a look at what our strategy is, what our tactics are, and don't give up. I get it. I see this all the time. So many people, have one property that didn't work out exactly how it was to be, and then they chuck their toys. It's sad for anyone who starts something and then gives up. But at the end of the day, you're a grown-up, you're an adult. You need to manage the mental, emotional capacity that you have to be a property investor as you go forward. So, hey, good to see everyone here. A bunch of you guys on now. I saw this little poster, and it was talking about being a millionaire. Who wants to be a millionaire? Anyone want to be a millionaire? Chuck it in the chat. Let me ask you a question, team. Is being a millionaire enough? And it's almost like I don't know, is anyone you feel like that's an uncomfortable question? Is $1 million enough? Well, the answer is it's actually not. It's actually not for a reasonable, comfortable lifestyle. $1 million is actually not a lot of money. These days, I feel like I'm old when I say that. These days, back in my day when I was young, $1 million, blah, blah, blah. And whoever said that, you can't retire on only $1 million. You cannot retire on $1 million, gang. We've chatted about this all the time, relentlessly. It's between $3 and $4 million worth of assets producing you an income. Now, if you just had that in cash, you could probably, I don't know, if you retired at 60 and you're going to live another 30 years, you need $3 million to use $100,000 a year, but I would prefer to have some assets at the end of it. But how likely is it? How likely is it for us to become a millionaire. Well, you know what? Australia is the lucky country. Let's have a look at these statistics right here when it comes to creating wealth in Australia. Now, let's have a look at this. In America, everyone thinks America, the land of opportunity, the US. What percentage of the population are millionaires and beyond? Okay, now there might be more billionaires in America than there is in Australia percentage-wise, but let's have a look at this. How likely is it when it comes to being a millionaire in America? Well, the statistics show us right now there is 0.06% of the American population with $1 million net or more, okay? Which is pretty cool. That's not bad. But let's have a look at Canada. Let's have a look at Canada. Canada's a pretty nice place. What about those guys? Their population is 37 million. They're not doing so great in the triple lineup here. 0.04% of Canadians have $1 million or more in net wealth. Okay, check this out. Have a look at Australia, a little country, but we punch above our weight. When it comes to our relative wealth, 0.07%. 0.07%. Gang, as a percentage of our population compared to America or Canada, and I'd like to get some stats for the rest of the world. This would be pretty interesting, actually. We're in the lucky country. We're in the lucky country. Okay? And sometimes I come across investors or people sort of sitting there going, oh, this stuff's so hard, you know, blah, 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 whatever it is. And, you know, sometimes I'm like, crikey, mate, just get over yourself. Australia is just amazing in comparison to many countries around the world. Yes, we've got our problems, which is normal. If you don't have problems, you're dead. That's the only way you don't have problems in this world. But we've got good opportunity. And the stats show we've got great opportunity to create a level of comfort and wealth for ourselves and our family in and around the world of property investing. Australia loves investing in real estate, and for me and maybe for you, that's going to be enough. Okay, so we've chatted about these before. How long and how much and how many bits of real estate do we need? You guys know this. Yeah, we have first world problems. You're dead right, Alison, because in the statistics, Australia has some great opportunity here. We have some great opportunity to capitalize on our country and the ability for you and me to self-rationalize, self-realize our choices. We can invest, we can create a portfolio, we can create assets, we can do all sorts of good things for ourselves as property investors. What does it look like? And I showed this little calculator the other day, and I took a snapshot this morning, team. Okay, what does it look like to get this outcome? And you guys have seen this many times before. 0.07. Oh, thanks, calculator person. 7%. 0.07. That's what popped up in the calculator. Maybe you can do all of them there and tell me how to write them out, because 0.07 popped up for my calculator. So gang, listen, how many properties do we need? How many properties do we want? We have these conversations often because I think it's important to keep these numbers in our mind. For me, the number is 6 to 7 properties. Maybe for you, the number is 6 to 7 properties into the future that will have a low debt and a high income, okay, as we roll along. So team, what does it look like when we're creating that portfolio? How is it going to manifest and come out for us as we go along? So let's have a bit of a look at this. 2021, 30 years to our goal and $100,000 passive income, okay? Now, 6 properties down here. And I put a date of 2045 in there. Okay, now that can be, way out into the future. But if you have a look at the middle of this section, and you guys have seen this before, I'm going to sort of draw it out here. Oh no, I wonder how we undo that. I put the picture on there, and let me see. Undo, yes. Undo, perfect. All right, I worked it out. Let me see if I saved that. Stick with me, team. I've had a... Anyway, I'll go freehand. What I was going to do is I was going to run... You guys saw that the debts went up, and it took ages for those debts to pay themselves off. 30 years, a property will pay itself off if you leave it alone, all right? And you guys saw those incomes rising pretty quickly. Out here, that 30-year plan into the future seems like it's a long way away. The danger zone for us when we're creating our wealth is this middle section here, okay? That middle section, 9 times out of 10, is between the 5th year and maybe the 10th year, okay? This is the danger zone, okay? So if we're looking to become wealthy, financially secure as we go, then we need to be aware of this little hump in the road called the danger zone, because this is our max debt, and that can be the time where we lose a bit of faith in our property portfolio, right? Right now, what I'm seeing in the marketplace is I'm seeing people who are disappointed because they might own a property in a location, Melbourne, Sydney, Brisbane, and their property specifically hasn't gone up in value yet, or it hasn't shown that value yet, right? And they're chucking their toys. Oh, this property investing stuff. And this is the danger zone, the danger mentally and emotionally, if it doesn't pan out right now exactly how you want to have it. If you want to be in that 1% club, like Alison's saying, or you want to create some wealth and be in that sort of that millionaire statistic, whatever that looks like, then team, we've got to make sure we manage and understand how to get through this little danger zone right there, okay? 5 to 6 properties works a treat. 3 or more will still work. It'll just take a little bit longer. For all of us, I like the idea of understanding or asking ourselves, compared to what, all right? Even if you got 2 properties or 3 properties, and that was the maximum effort capacity that you could create with your circumstances, absolutely awesome. That's friggin' amazing, okay? For me, you don't measure yourself by someone else. You don't measure yourself by Harry Triggerboff, who's got 6,000 properties, and you might have 2. And you're like, oh, I'm a failure because Harry's got 6,000 and I'm never going to succeed. Rubbish. You're maximizing your wealth with your plan and your strategy. And I think that, for me, is an absolute 100% success as we go along. So make sure, team, you don't give up. Make sure you don't get waylaid by this danger zone, this bumpy part in the road. And make sure you check in and keep yourself on track when it comes to your mental and emotional state when it comes to the marketplace, because not every property is going up in value right now, okay? That's just not happening. And if that's not happening for you and you're feeling a bit despondent, give us a shout out, because this thing is a mental game as much as a financial game. I had a property, I still got it, I had a property in the Gold Coast, and it was a 3-bedroom apartment overlooking the water in a really nice northern suburb. Bought it many years ago. It was fantastic. I got it at an absolute song. I renovated it at that point in time. And every property around around that property went up in value and mine stayed the same value. Matter of fact, it went down about 50 grand. And the problem with that property has been for many years is the plumbing in the walls was made, no one could know. You couldn't work it out with a building inspection, which I got. The plumbing in the walls of that building was made from this old plastic piping which kept on bursting. And every single apartment, there was 18 apartments in that building. It took over 10 years for every apartment to change all of the piping in the building. And now it's completely done. And now my values have gone up. Absolutely smashing. I got another property down in New South Wales, place called Long Jetty. It was, again, fantastic ocean location. The challenge, the problem is, one of the balconies at the front of the building got concrete cancer, okay? And we had a legal battle with the concrete contractor for about 5 years, and that held the building back, okay? But in the end, boom, went up significantly and made some money out of it, okay? So team, everyone will go through ups and downs in the travel when it comes to your property portfolio. Make sure you don't give up too early. Like Laura was saying last night in mentoring, don't give up too early, team, because it's very important to go the distance in this gig. Because over here, that's where the value is. That's where the money is. That's where the thing that you want is. But here is this place and space we have to work through strategically, tactically, mentally, emotionally to get through to the value on the other side. Takes a bit of time. There you go. Nice work, Jared. Got his 4th property in 4 years. Nice, mate. That is perfect. Yeah, and you're right. It doesn't feel any different, does it? You kind of build it up to more than it is. And the good part now, Jared, if you've got one of those properties not behaving, 2 or, one of them will be doing something good for you. The other 2 might be neutral. Maybe at one point, all of them will go up. At maybe one point, all of them will have a problem. But the good part about building your property portfolio and diversifying it, team, is that if you've got 4, 5, 6 properties in the market, you have less tumultuous value up and down, and also less tumultuous mental and emotional uncertainty when it comes to your property deals, all right? So as you go. Yeah, you're right, Michelle. In the time of instant gratification, there's no such thing as instant in real estate, team, that's for sure. Alison, I've got a question there. Do you view all of your investment properties, or were some sight unseen? Back in the olden days, Alison, I literally purchased nearly every property I own without ever visiting it. And that was a long time ago, 22, 25 years ago. I was just buying older properties that were cash flow. That's how positive real estate came up with its name. We were doing positive cash flow properties everywhere. Sam was talking about Cambalda last night. So we literally 2 decades ago, we were buying properties for $30,000 in outback Australia in small country towns, and we never visited them ever. We now have moved all the way into better locations. It's called the migration of money. Our budgets and our taste and our strategy changed over those 2 decades. And really for the last 10 years, we've been doing the conversation, the call, which is the flight to quality. After the GFC, after the mining incomes in the country towns disappeared, we brought all of our wealth into the cities, and now we've got a really strong strategy in around the cities because we don't have to chase country returns because interest rates and rents are so good in the cities now. So there you go, as you roll. So Sam's all over it. That's the way, mate. You've got a couple more to go, so that's awesome. And that's the thing, gang. Sam, you're in acquisition phase now, mate. Couple more to go. Know where you can get them. Sometimes you get one in super. Sometimes you tweak and dial the dollars and cents from wherever you can get them to get the acquisition done. And then now, you get into the cruise mode, okay? You might pay some debt off. You might renovate those properties, increase their rents. You know, there's a few things you can do when it comes to that stuff as you go. All right, gang. Well, listen, I had some technical difficulties today with my slides, my whiteboard, but you guys kind of get the drill. We're in a lucky country, Australia. Whatever the percentages are, if it's 7% or 0.07, whatever those percentages are, we are in some lucky country. We are in a lucky country when it comes to us and our ability to choose to create wealth and be financially secure and take care of ourselves and others in and around those ways. So, you know, think about that, team, as we go along. If you feel a bit despondent sometimes, that's what coaching and mentoring and support is all about. Get around a crew of people who are going to support you and help you not give up, you know, because it's easy to chuck your toys and give up when it feels like, you know, this is never going to work. But let me tell you, it does work. There might be a couple of dud properties. Sometimes we do buy just rubbish pieces of shit properties and we should sell them and move on. Like, you know, sometimes that's the case. Nothing's ever perfect. But if you keep moving forward, diversify, and keep the momentum going, you will have a good outcome, you know, in the time frame over a 15 or 20 year period. So there you go, team. Couple questions there. Could you still start in that way by regional due to budget? Sure you can. Yeah, for sure. Just make sure you do it compared to what? Whoever asked that question. The regionals aren't as cheap as you think they are, or the decent regionals, and you can actually get fringe of cities now, less expensive and better value than you can in the regionals, team. So just make sure you rationalise, you know, go look on the fringe of Brisbane, right? Go look on the fringe of Brisbane right now, and, you know, you can find reasonably valued properties in certain places and compare them to what you're getting and you know, those sorts of things. So, yeah, you can absolutely. If budget's a real constraint, then you start where you start. But do know, ultimately, you want your money to migrate to the best location possible and the best quality property possible. Okay, like we all know, team, that if you've got an old house in a small town, you know, that is less reliable than a really nice house in a big town. Like that's just economics 101. All right, there you go, team. Hopefully you're all awesome and well. I think that's about it from me this morning. A few technical difficulties, but I'll fix them up for tomorrow. Yeah, all good, all good. All right, team, that's it. I'm done. Coffee and chat, over and out. You guys be awesome. Stay safe wherever you are. And yeah, let's hang out tomorrow around about the same time. All right, gang. Adios.